Mortgage rates tick a little bit higher this week, but renting is still worse. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance, and you have run across the weekly report. Every single week, we post a weekly report to keep you informed of what's happening economically and things that may be affecting home buying or home selling in your area. So let's start off with this. So let's throw up the 10-year Treasury this week. Same as before. Mortgage rates continue to tick higher. You are seeing a lot of volatility day to day. So we're seeing a lot of repricing by lenders in the middle of the day. This is the 10-year Treasury chart. So the 10-year Treasury does mirror or mortgage rates do follow the 10-year Treasury. So 10-year Treasury is going higher and higher. So as you see this chart go higher, you are seeing interest rates go higher. So where are interest rates? And I'm throwing this up, and this is not necessarily where interest rates are for me or where I'm pricing interest rates for VA and for conventional. But I do use this because this description is, or the link to this site is in the description to this video. And I want people to have this as a ready reference. Take this link to this site, save it, so you're aware of just where interest rates are on a daily basis. And these are updated at about 4 p.m. weekly on a national level. Now, there is a little caveat here because this shows with 20% down, excellent credit. This is shared by Mortgage News Daily. So this is not where your particular client or where you as a buyer may be pricing for an interest rate or something like that, but this gives you a general idea. So I'm at a get together last night and a realtor's there, and they look at me and they said, hey, my client just got quoted at 6.75 on an interest rate on a conventional loan. Should they lock? And I said, absolutely, you take that deal. So this just gives you kind of a reference of where rates are. So I want you guys to have this and be informed. If you need a second opinion and want me to check among the 40 different banks that I shop to get interest rates, sure, reach out to me. We can take a look at what's available to you. Now, let's get to this. I said mortgage rates tick higher, but renting is still worse. So rental report came out from CoreLogic. This is the SFRI. This is the single family rental index that's released by CoreLogic for the month of August. This does lag behind a little bit. And if you look at the headline to this, it says U.S. rent growth continues to slow in August. Now that looks like, okay, prices on rents are coming down. No, that says rent growth is slowing. So rents were up at one point, 21%, depending on the area that you're renting in. As an aggregate now, rents are growing at 11%. So interest rates at 7%, okay? Some cases 7.5%, some cases in VA mid sixes or something like that. But rental growth is still higher and is still growing, but it's growing at a slower pace. Right now at 11.4. Excerpt from this article says the U.S. Excerpt from this article says U.S. single-family home rental costs posted 11.4% year-over-year increase in August, making the fourth straight month of annual deceleration. Now, what you're seeing in rents is the same thing that you're actually seeing in home prices right now. They're still continuing to grow, but you're seeing deceleration, which is what we expected. You don't want appreciation at 20% year over year. Home prices become unaffordable like they are in some cases for families right now. So you don't want that. You are seeing homes continue to grow in value. You're just seeing deceleration, them growing at a slower pace. And let's take a look at this chart here. So this is interesting because I want you to look at this chart because this still shows the index. So this says rents are still growing. They're just growing at a slower pace, okay? And used to hear people say, marry the house, date the rate. And I have said that a couple of times, but as I begin to think about that, I begin to realize that you're not even marrying a house. So in these cases, you may be in a situation where you have to decrease the amount that you're spending on a house. You may have to decrease, your expectations about a home at this time because interest rates are higher, which causes your monthly payment to be higher, which may cause that to be out of your reference right now. But I still think that you still buy a house instead of renting because the rental rates are still increasing. Let's look at this and how much these rents are going up in some cities. If you look at the top of that chart there, you see Miami's at the chart. If you're in Atlanta, you're up 11% in rental increases. San Diego, where a lot of our clients, our families that we help are, you're at 11.6%. All right, so you're still increasing there. DFW area, Dallas, Plano, Irving area, still 11.4%. So, I still think it is a good time to buy a house. People say, Major, you're saying that because you're a mortgage guy and you sell money for people to buy houses. No, when you look at the facts and you look at the figures, if you can buy a house where you have appreciation, where you have tax deductions, and you can write off the interest expense on that home, and you have an opportunity to build a legacy and build solid footing for your family versus renting and building someone else's wealth and someone else's legacy, yeah, I'm gonna choose my family over that every single time. So like I said, decrease your expectations maybe, get into a home. You may have to refinance that home when rates drop. We are seeing some things where it's possible that inflation is starting to taper and we may see some things start to reverse or at least level out. I do believe that interest rates are going to continue to grow or remain elevated for the remainder of the calendar year. That's why I think if you go into contract, you lock your loan immediately. Do not float, do not wait till tomorrow, do not trust this market. Your interest rate will likely go up, so lock in your interest rate. A couple of things I wrap up with here. We told you last week about our Home for Christmas program, and this is starting to gain a whole lot of traction. It is our goal to help 5 families buy a home using our down payment assistance loan. Now, this is a FHA loan. It's a FHA loan, 3.5% down. That's the minimum down payment. You can get the full down payment assistance on an FHA loan. And in some markets, you're actually getting the seller or the builder to cover closing costs. And so you can really walk into a home before Christmas with little money out of pocket. You do have to qualify on an FHA loan on that. Now, one last bit of information I want to share with you. It's very exciting news. And I know some people are thinking, oh, Major, I know you're going to get to it. You're going to tell us that Christian McCaffrey is now a 49er. No, that's not the big news, although it is great news. The big news is we are now a full service brokerage. So we can broker now doing commercial lending also. This is SBA loans, equipment loans for businesses, hard money loans. We have multiple different things at our disposal in order to serve the clients and serve our realtor partners at a much higher level. So we were working on this for a long time and we were fighting for it and trying to get it. Now we have the ability to be an absolute full service brokerage. So any of your lending needs, call us up. We can help you or figure out a solution to your problem. Okay, that's it for this week. Okay, keep in mind, you're going to hear a lot about interest rates. You're going to continue to hear a lot about interest rates. But at the end of the day, renting is still a worse option. So get into a home, refinance when rates drop. See you next time on Major Money Matters.